Let's now look at the contents of a PRINCE2 business case, reminding ourselves that in tailoring PRINCE2 to the project environment, this list that I'm going to take you through would need to be tailored as appropriate to the nature, size, complexity and so on of this particular project and hence business case to the organisation. Fairly straightforward, starting with an executive summary listing key points such as important benefits and possibly a headline return on investment statement. The reasons why the project is needed and how it will enable the achievement of corporate strategies and objectives. You'll remember, of course, that the project board executive is responsible for ensuring that the project remains aligned with such strategies and objectives. Now, the reasons for the project are often misstated. It's important to understand that PRINCE2 goes to great pains to say that the reasons should explain the problem to be solved and or an opportunity to be gained. Very often reasons get confused with benefits. For example, the reason why we are implementing a new customer help desk is to improve customer relationships and to respond more quickly to their questions, whereas the benefits might well be an increased revenue stream. Business options. This is an analysis and reasoned recommendation for the business options and would normally include an option of do nothing, do minimum or do something. Put less cryptically, the do nothing would act as the starting point. You see, if you're looking at a business case which is compelling, it needs to clearly articulate what the difference would be if it didn't exist. So do nothing gives you a baseline reference. Do nothing might show, for example, profit figures for the next 12 months if this project were not to be implemented. Do the minimum might be a short, quick, easy, cheap, low risk, whatever option. And another option might be something else, perhaps a more elegant, perhaps a more expensive one, but giving more benefits. What we're looking at here is making the decision about which one of these options is best. And it provides the answer to the question, for this level of investment, are the anticipated benefits more desirable, viable and achievable than the other options which we've identified as being available? Whichever the chosen option is, it should continue to be assessed for desirability, viability and achievability throughout the project, particularly at the end of each stage. As new risks arise, one will want to still make sure that we've chosen the best option. Now, as I introduce the next section in the business case, I want to remind you that the project approach is how you're going to deliver the project. Business options are what you're going to do. Now, the next is the expected benefits. Now, these are the positive ones. A list of each benefit, including its quantifiable current status. In other words, what is it as a baseline reference point? Now, benefits can be financial or non-financial, but they must always align with corporate objectives and strategy. What's the point of running a project if it's not pointing in the direction that your business is? And it should map from the project outputs, that's the products, and the outcomes, like the diagram I showed you at the beginning of this session. It must be quantified with tolerances. In other words, an expected benefits would have a plus or minus range of tolerances within which the business case would still be viable, desirable and achievable. Each benefit must be measurable and assigned. What we mean by that is the area, if you will, where the benefit will be felt, either in a department or a product line or something else, and must include any benefit realization requirements. We're going to come to the benefits review plan shortly. So these are positive benefits. Continuing the business case, the project should not include any products that do not directly or indirectly enable benefit realization. Now, that really is a headline statement. It's very easy, particularly when planning and being influenced by senior stakeholders, to bolt on, if you will, extra products. The litmus test should always be, does this product contribute directly or indirectly to the benefits laid out in the business case? Wherever possible, benefits should be expressed in tangible ways. Why? Because they're more easily measured and proven. The quantification of benefits enables benefit tolerance to be set, as I said, plus or minus, whatever the benefit metric is, and the measurability of the benefits ensures that they can be proven. Let's continue now with the contents of the business case. We did benefits in the previous slide. This is where we do the same for disbenefits. Outcomes perceived as negative by one or more stakeholders. A disbenefit is an anticipated consequence as a result of the project outcome and should not be confused with a risk. For example, having a centralized help desk may mean, as I said earlier, that you have some redundancies, some retraining, or it may simply be that you've lost critical mass in different regions because you've centralized the help team in one geographical place. What we'd want to do with disbenefits is acknowledge them, but manage them to minimize them. Can you see now that a business case that only mentions benefits but deliberately doesn't include disbenefits would be an unbalanced and frankly a slightly dishonest business case? The value of including disbenefits is we can see the whole picture and therefore enable the project board, ultimately of course the project board executive, to make an informed choice. Timescale. Now the project timescale and the benefit realization period should be both included here. This is why when we come to the initiating a project process, we'll see that the project plan is normally developed first and then followed by refining the business case to develop the detailed business case. The reason is of course we need the timescale aspects of the project plan. It should show the project cost time period, the start to finish duration, if you will, of the project. The cost benefit analysis period, I'll show that in a minute. It's the timescale during which benefits will be analysed and realised. When the benefits will accrue, the key time periods. Notice I'm using plural here. It could be that a project only has one benefit, but normally benefits are more than one, and different benefits may come on stream at different points. So the when, the time frame, is important. The earliest and latest feasible start date, and ditto for the finish date. So remember, the inputs you use from the project plan to the business case are the project timescale. You'll also, however, want benefit realization period. Similarly with costs, again the summarized project plan costs, including any cost-based assumptions that were made. But this is not just the project plan costs, it's also the costs for ongoing operations and maintenance costs and where their funding is to come from. The next piece is called the investment appraisal. Now this compares the aggregated, summarized if you will, benefits and those disbenefits against the costs within the project, the budget if you will. And these of course are extracted directly from the project plan. Plus, however, also ongoing incremental operations and maintenance costs. Going back to my example of a help desk, you could well see that although the project plan would contain the costs of implementation, once it's being used, there will be extra expense, for example, in terms of staff costs because of the 24-hour service that is now being offered. The new help desk may be more technically challenging or use different forms of technology and functionality, and therefore maintenance costs may also be increased. Now the term investment appraisal is a general one and may use many different types of techniques. We've just looked at cost-benefit analysis, but please be aware there are others as well. I only list them here for general information. You would not be expected to describe these in any detail for the PRINCE2 exams. But for example, return on investment is one which you may have heard already, or establishing the length of time before your project costs are covered by revenue income. This is called the payback period. As you know, we've just covered net present value. Another example might be internal rate of return. Okay, so there's different types. What is important is that the business case should have some form of investment appraisal, and this will be updated throughout the life of the project, particularly at the end of each stage. The objective here is to establish that the business case remains viable. Also, of course, that it is desirable and remains achievable. The next section are the risks, and I've included here a diagram which we'll cover when we look at the risk theme within PRINCE2. It's called a summary risk profile, and it's a graph, if you will, a scatter diagram to be more precise, where the vertical axis is calibrated in probability. From here, very high, high, medium, low, and very low. And the horizontal axis shows impact of each individual risk from very low to very high. And these numbers here relate from the risk register reference the number of each unique risk. For example, risk number 9 has been identified as very highly likely to happen, and if it does happen, it will have a very high impact. Whereas to take risk number 6, it's not very likely to happen, very low probability, and even if it did happen, its impact would be low. In this way, we can get an understanding, via a scatter diagram type of approach, of where the most severe risks, and these most severe risks, of course, by virtue of the scales, are shown top right here. So this is a summary diagram of the aggregated risks using the summary risk profile. These risks may either reduce or enhance the benefits. Again, when we cover the risk theme, we'll learn that they are negative threats, the normal type associated with the word risk, but also positive opportunities. So these aggregated risks will either reduce or enhance the benefits, or reduce or increase the costs, again depending on whether it's a threat or an opportunity. Be aware for now that the total content of all of a project's risks are held on the risk register. But here in the business case, we're showing the major risks that, if they occurred, would have an effect on the business objectives and benefits.